Hello traders, Rich here and welcome to Kucoin as episode 3, and today we are going to learn about market structure. If you don't know about Kucoin, it's one of the largest crypto exchanges in the world with over 600 billion traded volume on the platform and 10 million registered users from more than 200 different countries. Kucoin has many features like margin trading, spot trading, trading bots, mining pool, staking, and many more, with over 600 listed coins. If you don't have an account yet, I'll make sure to include my referral link in the description below. And if you create an account through it, you'll benefit from 20% discounts on your trading fees. So let's get started. And as usual, cheers. So first of all, what is market structure and why it's very important? As you already know from my previous videos, I always start from higher time frames, daily and weekly, to know where we stand in the market. And market structure will help us do that. No matter if you are using a trend line, a moving average, a support and resistance, no matter what is your trading style, understanding market structure is very, very important. So we've got three market phases. So we've got a bullish trend where we can see clearly the price is going up, the bulls are stronger, pushing higher. So we've got a big impulse movement resulting in a higher high and eventually with a higher low. And the bears are kicking in a little bit, but they are not taking over. They are making just a correction, but the bulls are kicking in again and making this big movement. So it's like we have a big war, and inside this war we have like a battle, and so on. But overall, for now, the bulls are clearly winning the overall war, even though like the bears might win like some battles. Okay, so this is a bullish trend, and as mentioned in my previous videos, that when we are bullish, we're waiting for the correction to be about to end to catch the next impulse movement upward, but we can't really know where it would end. It can end here, or even dive deeper to the previous low before trading higher. But we're still in a bullish trend. We are still looking for buy setups. Vice versa, in case of a bearish trend, the bears are kicking in, pushing the price lower, resulting in a lower low and a lower high. And of course, last but not least, we've got the classic horizontal range where we'll be looking for sell around the upper bound, buy around the lower bound, eventually until it's broken upward or downwards. So now, okay, so we know that we have an uptrend and a downtrend, but how do we know that we might have a potential reversal? So like if we follow the logic that I like went over previously, that the bulls are winning the war, right? So we've got a battle here, the bears are kicking in, a small correction, and then a bigger impulse movement. So the bulls are very aggressive, very strong, not even letting the bears make a big correction. However, when we see that the bulls are still making big impulse, are still in control, resulting in a higher high, but the last impulse, as you clearly see in this case, it's smaller than the previous impulse. That's our first alert that we might have a shift in momentum. The second alert is when this impulse is getting flat. So if you compare the angle of this one to this one, look at how flat this one is. And here we go, smaller and flat. Okay, and anyway, like you don't need like to like follow the like to calculate the exact like distance. You can see it visually. If you connect the highs, now you can see that here we go, we've got a shift in momentum. So the bulls aren't strong enough to push higher as they were pushing before. Instead, it's resulting in a flat movement, which like sooner or later, because like nothing can trade higher forever, sooner or later we will have a reversal. So that's our first alert, that the impulse are getting smaller. The second one is that the impulse are getting also flat. However, it's just an early alert that we have a potential reversal, right? A potential reversal. For it to be confirmed, we still need to see a break below the previous low, which is the low in between the previous high. So now we can say that we might have a shift in momentum, and we can expect lower lows and lower highs until eventually the last high is broken upward, and so on. So that's our first like way to know where we are in the market. We are bullish, bearish, and so on. And when you see that the price is failing to make two higher highs and lower lows in a row, right? Higher highs, higher lows, or lower lows, lower highs. Now we know that we are inside a range. So a higher high, but the price failed to make another higher high, right? It might do a lower low, but it didn't do a higher low. So that's when you know that you are currently in a bearish market. So you actually see a random like movement upward, downward, higher high, lower high, lower high, lower low, right? We can't really know what's happening. That's when you know that you are in a range, and you will identify the upper bound, which is the highest point of the range, and the lower bound, which is the lowest point of the range, and you wait for like one of the bulls or the bears to take over to win this battle, right? So that's basically it. And of course, like when it comes to the chart, we'll take many examples in a bit, because you know me, I like practical examples. That you can't really see it like exactly like this, right? It's not as clean as these lines. So inside this movement, you will have multiple higher highs and higher lows, and vice versa, right? So this would be from a short-term perspective. This would like mean that the correction is now confirmed to start the correction, because we are bullish. And this would mean when we have a break above this last minor high, that the bulls are now ready, almost ready to start the next impulse movement upward, right? So inside the impulse, we have minor impulse and correction movements. And keep in mind that we always do our market structure analysis from higher time frame, or at least for the day traders, always start from the higher time frames, daily and weekly, because this candle from daily like is the result of billions of or millions of dollars to make this move. However, on M5, it's just the result of a couple thousands of dollars that will make this move. So the bigger the volume, the more you can rely on the market structure, on the candlestick patterns, on price action, and so on. This is a rule in general. And of course, it depends on the pair. So for example, now since we are going over like crypto, of course, Bitcoin, like when you go over market structure there, because like it has a market cap of billions, right? So like of course a candle movement, it would be like bigger than a candle, like the same exact candle that you see on, for example, on DOT, because it has a lower market cap. So like you can rely on market structure of Bitcoin more. That's why I always keep an eye first on total, which holds what? The biggest market cap of all, of course, when it comes to crypto. So I also start with total, and next, which is like next, or like the biggest crypto instrument, which is Bitcoin. But of course, like total is the biggest of all, because it's like Bitcoin and all the altcoins combined. Okay, so keep that in mind. The bigger the volume, the better or the cleaner the market structure would be. So this is basically it. Now let's go over and do some examples, a practical one. Keep in mind that we've got two types of highs and lows, the minor ones and the major ones. So if you check this chart, we can clearly see that we've got a range here, then price broke this range downward. All right, so we've got a range we failed to make, like clean lower lows and lower highs, or higher lows and higher highs, right? So we've got a higher high here, and we've got a equal low, and we've got a higher high here, 1 2, but we've got what? We've got a lower low. Okay, so we don't have a clean trend of higher highs and higher lows. So we'll wait for this range to be broken downward or upward. In this case, it's broken downward, a classic retest, and then trade it lower. So we are now technically bearish. This is our first impulse movement, a very aggressive one, as mentioned previously from the example. An aggressive impulse, a correction, another impulse movement lower, right, which is still big, still steep. However, we can see here that we've got a small one and it's almost flat. So look at how, sorry about that, look at how steep this one is. This is also big, but like smaller than the previous one. This is a small one and flat. Okay, this is an early alert that a potential reversal might happen, and it was confirmed after the bulls took over by breaking above this previous high, which is the result of this lower low. So now we are technically bullish. This is our impulse, a very small correction, another impulse, another correction, another impulse, and kind of we can see that the price is stuck inside a range and failed to make a higher high here, instead made a lower high, which is an early alert that a potential reversal might happen. However, the reversal would be confirmed after a break below the previous low, which is here and this week, and here we go. So price failed to break below it, and of course we need a candle close below it to confirm the break. Didn't happen, so we are still bullish. And instead, if you zoom in a little bit, we can see that this is a minor low broken downward, which means that it's just that the bears are taking over for the correction to start. The lows are broken downward for the correction to start, and then the bulls broke it upward for the next impulse movement to start. And the same goes for this minor low here. The correction is about to start. What we might still see this until the last major low is broken downward, which is basically here, right? So technically, this is our low, a higher low, right? Next, we've got a higher low. So we need a big impulse movement pushing in the direction of the trend to consider it a major low, and of course resulting in a higher high. And this is the last low, a higher high. Look at how big this one is, and here we go. This is our last low that the bears need to break to confirm that I'm now taking over. From a shorter term perspective, this is a low here, which you can see even better from H4 if you zoom in. Let me give you an example. Where is it? I guess it's here, right? So I guess this is it. So this is it, and this is our major low here. So now the bears are taking over for a correction movement to start. Let me check. Yes, here we go. You can see now like two drawings. Okay. Now the bears took over here, and this is our first impulse, a very small correction, another impulse movement downwards. So now we are technically, anyway, when breaking below this one here, we know that now we are overall bearish, right? Correction, impulse pushing lower, lower and lower. And yes, you might ask, we've got, you know what, let me read these ones for now. Okay, fantastic. Let's keep it as clear as possible. Read this one as well. Okay, so now you might ask, okay, so we've got this one here, it's broken upward, so now have a shift in momentum. No, we don't, because this one is a very small one compared to this big one. Okay, so we need major swing highs to be broken upward. In this case, from this entire movement, this is our last major high, which we need a break above to confirm that the buyers are finally taking over. Instead, the bulls took over here for a correction. Correction started. Then you've got this low here. The bears took over here for the next impulse movement to start, and so on, right? So like I can go forever, no matter which chart like I have, no matter the name, and you can hide it. Can apply the same style, okay, the same like ones we went over today. So this is basically it. Impulse, a correction, another impulse movement lower, a correction, a bigger impulse, and yes, we've got a minor low here, minor high here, broken up for the correction to start, and then we drop lower. This is our last major high for the bulls to take over. We need to see a break above it. Next, we have this one, which like is a big impulse. So technically now, this is our last major, let me highlight it to the wick. Here we go. This is our last major high that we need the bulls to break above to take over from a long-term perspective. Technically, we are still overall bearish. However, we can see that we're going to have like a range around this area. And yes, we have a minor swing high here, broken upward, which means that the correction is about to start. The correction started. And if you watch my previous analysis, I've mentioned this one, that it's currently like the bulls took over here, take it higher, and then it's just a correction, which is this. You know what? Let me make it appear on H4. Okay. So here we go, right? So the bulls took over here, as mentioned before, that the correction is about to start, and then the bears took over again for the next impulse to start by breaking below this bottom or this low. Okay, so this is basically it. For now, we are technically overall bearish, and of course, you can combine it with like different tools. We are bullish from a long-term perspective inside this correction phase, waiting for the bulls to take over to catch the next impulse movement upward, just like previously. And we want a rejection, so we've got a demand zone here. We have an aggressive movement up from it. So this is an interesting area to look for buy setups. That's why we are looking for buy setups in the first place. Now, if we zoom into daily time frame, and as you noticed at the start, I had this one. We have a channel here. This is our last major high. So no matter what we have, we always, our trigger, our overall view is through market structure. Now, for the bulls to take over, just like previously, for the correction movement to start, we need to see a break above this one here, which can be seen better from H4 time frame, as you clearly see. So after a break above this one, we know that the bulls are taking over, but it is just from a short-term perspective, just a correction, until eventually the correction would be extended to be the next impulse, which in this case, we need to see this. We need to see a break above this area here, which you saw at the start. This is my trigger for the bulls to take over from a long-term perspective. And to apply the logic that we saw previously, we had big impulse movements pushing price lower, right? So big impulse, steep. Now it's getting smaller in size compared to this, and it's also getting flat. Okay, and now it's stuck inside this range. So we have a bearish trend, now a range. Let's see if we get a break upward for the bullish trend to start. So that's it. Let's take more examples on one or two instruments. This is it on Quant, on QNT. We are bullish, big impulse movements, small correction, big impulse movements, small corrections. This is our last major low, right? So a big impulse movement, which is of course smaller than the previous one. So big, smaller in size. This is our last major low, broken downward. Now we are bearish, right? So now the momentum is shifted from bullish to bearish, and price started to make, this is our first impulse because it broke below the previous low, then correction, and then another impulse movement lower, a correction, another impulse movement lower, a correction. And as you clearly see, this is the first time where we see a deep correction. So like, look at how flat this one is. Right, look at how it's like a horizontal one. So impulse, a horizontal one, impulse, and a flat one. And then we saw this one, which is like, as you can see, a steep correction. So it's just like the impulse are getting weaker, the correction, or the bulls in this case, are getting stronger. This is how you feel the market from a market structure perspective, that who is currently in control and like what we might see next. So big impulse, small corrections, and now we can see the impulse are getting smaller, and around here the bulls, even the bears in this case, sorry, failed to make a lower low, instead made a higher low, which give us also an early alert that a potential reversal might happen. And for now, this is our last high. Of course, like we can make it a little bit higher to cover this area here, which is a supply zone. And I also posted this one. I've been looking for buy stops because I have a channel now broken upward, waiting for the trigger. And we've got also a demand zone, which we can see very clearly from weekly time frame. Let's take one more example, and that would be it. On GRT, also around a demand area, I've posted this one also previously, that we were bearish, price broke above the previous high. Now we are bullish, broke below the previous low. Now we are bearish above the previous high. We are bullish below the previous low. We are bearish, right? So look how clean this one is. Okay, of course, this is daily time frame, which is like, to me, the cleanest one to do your market structure analysis, because on weekly, like, you can't really find much, especially when you are going when you are doing analysis on crypto. So this is the last major low. Of course, we have a low here, which is like the correction. So major low broken downward. Now we are bearish, big impulse movements. As you can see, big impulse, small correction, big impulse, small correction. And here we go, a small correction, but look at how small this one is compared to these ones, and how flat, like if you compare it like this, right? So look at how flat this one is, especially if you compare it to this one. So steep, flat, even more flat. Okay, so but the bears are still in control, resulting in a lower low. But next, the bulls, like, at least for now, if this like swing trade higher from here to create a full swing, then the bulls would be taking over a little bit. It's an early alert because we've got a higher low. So the bears for now are still in control. They are getting weaker, exhausted, couldn't push lower just like before, but they are still pushing. Now we can clearly see that the bears are failing to make a low just like before, resulting in a higher low. So this is basically it. And of course, as mentioned previously many times, this is our last major high. All right, so let me draw it in a cleaner manner. This is our last major high, but I need a little bit higher to cover these rejections here, which is the high in between these two lower lows. All right, and we want for the bulls to take over from a long-term perspective, we need to see a break above it. And since we have a wick here, I also made it a little bit higher. This is for GRT from long-term perspective. Of course, we have a demand zone, we have a inverse head and shoulders pattern, which we saw previously, if you remember, on the previous episode where price was around here, right? I guess. So, of course, from a short-term perspective, just like previously, for the bulls to take over, for the correction to start, we need to see a break above it. It's just a correction to start, just a correction to start, and the same goes for this one. So when we have a break above this area, the correction is about to start, okay, which is this high from daily, this high from daily. These are minor highs. So that would be it for the bulls to take over. Now for a short-term perspective, and this would be from a long-term perspective, to see a shift in momentum from bearish to bullish. We can see it was steep, now getting like flat, and let's see if we'll get this for the bulls to take over. That's it for this video. Hope you enjoyed it. Let me know about like what topic you would like me to go over next, or if you would like me to go over analysis for a specific altcoin. Let me know in the comments, and I'll see you on the next one.